Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of January the 21st, 2019. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, the dollar is finding support off our October 22nd, 2018 lows. We can see our verified support zone has identified this move. The dollar has come down, hit this level, and it's starting to rise. Now, the problem here, guys, is that we have an absolute massive amount of resistance sitting up between 97.30 and 97.50. So when we're looking at these particular resistance levels, the dollar still has a lot of work to do for this to be any kind of long-term buy signal. Now, when we look at it from 1 year ago, which is very important, we can see that the dollar doesn't usually fare very well between January and April, and it starts to get its boost then. Now, with no rate hikes coming anytime soon, in my respectful opinion, the bias still for the dollar is to come up to a known area of resistance and likely fail. Now, our predicted MACD, our predicted differences in neural index are all pointing higher, so be careful with this come Tuesday. We could see an extended rally on Monday only for it to reverse on Tuesday. Now, when we look at this again, we draw this resistance in here. Friday, for the most part, is not always an accurate trading day. So what I mean by that is that the markets on Friday are thin, illiquid, and big money is usually not in there. So when we look at this, when the old saying, when the cat's away, the mouse will play. So the probability that we could see a reversal still remains relatively high. Now, what we do want to watch on Monday and Tuesday of next week is this critical VP pivot at 95.65. If we can hold above this area, then the dollar should be able to extend up to a known area of verified resistance between 97.50 and the 96.70 area. But that's left to be seen if the dollar can make that kind of a move. Now, when we look at how this directly relates to gold, we can see that gold is struggling as the dollar rises. This is what the basis of intermarket technical analysis is. So we're simply watching, waiting for gold to start to turn around, and that will be the trigger for us to start selling dollars again. Right now, again, gold is struggling up here against this verified resistance zone right around this 1310 mark. So a corrective move lower is perfectly natural here, guys. It doesn't mean that gold is reversing lower and the dollar is just going to go screaming higher. It just means that gold's had a very nice run up here and now people are taking profit. So always remember that. When we look at stocks going into next week, in my respectful opinion, very little has changed with the stocks here. They are bullish to begin the year. You'll remember last year in 2018 of January, that absolutely vicious crash that we got, the probability of that happening again is very high because as I've outlined over the last several weeks, we have basically a triple top sitting up here at or about the 28.30 mark, 28.25. So only a sustained break of this particular verified resistance zone would actually take the pressure off the downside. Now, as the stocks move higher, I feel that a lot of your bigger players are going to be using this to get a better opportunity on shorts. And again, just because the Fed is not going to hike, that doesn't mean it's going to save the particular stocks here. So once again, we'll watch this level up here, but the immediate resistance the S&P has to break free and clear of is 26.87. Now, we are closing very tight up against that level. We've closed at 26.71. But we must break through this area up here between 28.30 and 26, about the 26.70 mark is actually more of a sell zone than a buy zone. So VantagePoint very accurately forecasting that stocks are moving higher. We're just waiting for an additional signal via the neural index. We're already grossly overbought here on the RSI, 89.5. So not a lot of momentum here. The momentum on this particular trade was way back here off of this verified support zone. That's going back to our January 4th low. We're rallying off of that, but where the RSI is currently sitting at is not overly bullish for stocks. It's actually pointing out that an exhaustion point could be right around the corner. Of course, if the S&P 500 falls, we're going to see oil fall with it. And again, oil starting to, again, becoming overdone, but you'll notice this massive verified resistance zone here. I'm not sure if we're going to see oil above the 70 mark anytime soon, maybe towards the summer, but this is not a time of year that oil normally rallies. If we look at oil from 1 year ago, oil took a fairly significant beating here. And really, what's even more comical about this is we're almost exactly where we were 1 year ago. So again, if oil is going to rally, usually we see the rally in oil more towards May and June. But stocks will be a determining factor, absolutely. Now, as we go into our main Forex pairs, Euro, US, very, very highly correlated to, right now we have a very high inverse correlation. So the trick that we can apply here is that if we're correct and stocks fail in the coming weeks ahead, then the Euro will come down into these verified support zones, which will give us a fantastic buying opportunity. I would favor longs on Euro US. I'm not a particularly strong buyer of US dollars given the current political environment and everything that's going on. So we're going to be watching this very closely. But in my respectful opinion, a move down into this lower, down around 1309, and then additional support we will see all the way down into this 112.15 area is an absolute buying opportunity at the current time. We're not oversold yet, so further downside on the euro is likely at this particular time based around the VantagePoint indicators. Now, the pound dollar is bouncing around all over the place with, again, Brexit. That's causing some interesting moves on US Swiss franc. When it's positive, Great Britain moves up, US Swiss franc moves lower. But again, if we look at over the course of the last year on US Swiss franc, it really does show the depreciation in the US dollar against some of these currencies. And remember, the Swiss banks, they charge you to hold money in there. So there really is no reason to be buying the Swiss franc. But the fact of the matter is it's a risk-off currency. If those stocks plummet, then US Swiss franc continues to move lower. But selling into this parity level based around this the signals that we're seeing here right now, the verified zones, is reasonable. So that's the way we look at it. It may be somewhat counter trend, but still, again, unless we really, in my respectful opinion, unless we break free and clear of 101.28, then this whole area up here is a classic sell zone for us. Same as British pound, US dollar, Brexit, all over the map here. I've warned everybody, including my own direct clients, to be careful with this pair. Very strong resistance up to this 132.80, 133.10 area. The indicators are starting to turn down. We actually have a large area, a nice rally again at the beginning of the year, moving higher. But the indicators from VantagePoint are slowly rolling over to the downside. So be careful with this one. And again, when we look at our critical long-term crossover without the black line, we're looking to see if the market can break down below 128.85 and stay below that area. If it stays below 128.85, then we're likely going to see further downside. But the UK Parliament, I believe, is putting Plan B in on Monday for Brexit. So be very cautious with this pair or just avoid it altogether. Now, as we look at the dollar yen for next week, struggling to try and break and hold above the VantagePoint 18-day predicted moving average or the T-cross long at 109.40. We've closed about 31/100ths of a cent above that area, but still not an overly strong move here. We need stocks moving, continuing to move higher if dollar yen is going to move higher. At this particular time, my optimism on that remains heavily guarded. So we're going to be very cautious with this pair. There is a makeshift buy signal forming, but again, we want to watch this blue line very, very closely. You can see as we snuck above and closed above it, that led to a 3-day rally on the dollar yen using the VantagePoint T-cross long, or the long predicted, excuse me, as a pivot area on a daily basis. This is a very efficient way to use the VantagePoint software. But again, we could see a violent reversal if stocks move lower. So in my respectful opinion, dollar yen, I could only hope that we move towards 114 so I can get an even better entry on my shorts. Now, looking at the three main commodity currencies going into next week, US CAD, Aussie US, New Zealand US, they're all kind of the same trade. to be honest. So when we're looking at US CAD, you can see here that we're struggling or fighting with that T-cross long to get above it. The long predicted and the T-cross long, neither one have been breached at this time. The indicators, the neural index, very, very mixed. Still a slight bias lower, but again, if oil and stocks have topped out for now, then US Canada on a break of 132.74 would see a potentially a very good long trade. But again, you can see the resistance, where exactly the resistance is using the verified zones. We've got a big one sitting here at 132.97, and we're just seeing if we can break above that. If we do break above that, then longs next week are absolutely on the table. Now, the reason why I would slightly favor longs on US Canada, because Aussie US and New Zealand US have completely stalled up against our new verified resistance zone, and we're not breaking free and clear. Now, we're holding above the T-cross long at 71.57, but clearly struggling to make any further gains from this particular point. We can assess that our medium-term crossing, our long predicted difference off these verified zones, has been quite good. It's very, very small moves, but still, unless we can break free and clear of this upper verified zone, which is coming in about 73.93, you can see the downside here is wide open. Same as New Zealand, US. New Zealand it could be a leading indicator for New Zealand or for Aussie US at this particular time. You can see we have 4 verified resistance zones here up to the 70-cent mark. We're unable to break above that, but you can see that each one of these new highs, we've made a lower high. Now we're turning lower yet again, and our predicted differences also supporting with the neural index further downside. Now, when we talk about potential momentum, we can see that the RSI is at 34.9. This is a general misconception. The RSI is not an overbought or oversold indicator, guys. It's a momentum indicator. So looks like we have momentum building to the downside, which also suggests that the equity markets could be getting ready to turn very soon. So with that said, this is the Forex Weekly Outlook for the week of January the 21st, 2019.